We all want to know, why is the market falling? 2025, we're already down 1.3%. The S&P 500, fear is strong right now. And it's because the biggest thing are we going to be cutting interest rates? Sure we are. It's 2025. That's what the Federal Reserve stated to us. Traders, that means nothing. I'm going to tell you a little story here. Back in 2021, you remember 2021? Pretty interesting time in our lives. We started giving out $1,500 to every single family. Do you guys remember that? Everyone was getting free money. And not only that, because the Federal Reserve was so scared we were going to fall into a recession, they lowered interest rates to almost nothing. Imagine getting $1,500 to be able to support yourself and your family and lowering interest rates down to nothing. What happened in 2020, 2021? People were spending money left and right. People were buying MacBooks with their $1,500. They were putting down deposits for cars. Their credit card bills are going nuts. Hey, I got $1,500 to the government. Let me go ahead and buy this picture of a random monkey on an NFT. People were just spending money left and right. It was getting crazy. And that's what led to inflation going absolutely wild. But then Jerome Powell had to step up. And he said, hey guys, I know everyone's having fun in 2021. Everyone's having a good time. But now, as we go into 2022, we got to start, raising rates a little bit. We got to start slowing this on down here a little bit. He said, don't worry. It's only going to be 3 rates, 3 raised rates, and we're just going to do 0.25%. So the first one came, and it was 0.25%. And everyone said, okay, we expected that. Then Jerome Powell came out at the next meeting. He said, hey, things are a little bit higher than what we thought they were going to be. We got to do 0.5%. And people were like, all right, 0.5%. We get it. Things were a little bit crazy. We partied a little bit too much. Then we came out with the next one. And he said, hey, sorry guys, this is a little bit too wild. Again, we got to go 0.75%. And people started saying, what, 0.75%? What are you talking about? He said, don't worry. This is probably it. Then we had another 0.75 and another 0.75 and another 0.75 and another 0.75 and another 0.75. Then we had 0.5, then we had 0.5, then we had 0.25. We had 12 rate hikes back in 2022. We saw the market basically go from nonstop partying to being absolutely dead. We could go ahead and take a look right here on the S&P 500 on how this worked. We saw, first things first, the fear run on in. The fear ran in, and the Federal Reserve said, let's send out money, let's stimulate this economy, let's drop interest rates down to nothing. People were partying like it's 1978. Ow! Having a great time. Then Jerome Powell said, hey, 0.25 rate cut. 0.5, 0.75, 0.75, 0.75, 0.75, 0.75, 0.5, 0.5. But then people started getting excited. And why did people start getting excited? We started going crazy because we're saying, yes, rate cuts are going to get cut again. You guys remember when we partied and we went nuts all the way back? And again, this time we're about to do it again. And even before these rate cuts even started happening, over the last year, people have been acting like these rate cuts have already happened. But what was the bad news? What was the bad news that happened about 3 weeks ago? 3 weeks ago, Jerome Powell just came on out. Let's go back over to a daily chart. And he stated right here on this huge red day, he stated, hey guys, you know how we said we were going to have 4 rate cuts? Yeah, right now we're only going to have 2 rate cuts. And now here we go again. Here we go again with the Federal Reserve. Here we go with Jerome Powell kind of going against his word. Hey guys, remember when we were going to have 0.25 and a 0.75 and there's 12 different rate cuts? Hey, don't worry guys, we're going to have 4 rate cuts in 2025. Well, now it's only going to be 2 rate cuts in 2025. And as we know, what happened last Friday? On Friday, we saw that unemployment falls to 4.1%. We see that interest rates are still up, unemployment is down, and now this is giving Jerome Powell another reason not to cut rates. Jerome Powell and the Federal Reserve have been trying to battle inflation to bring it down to the 2% goal. They have yet to accomplish this goal. They feel the pressure from companies, from the American public, from businesses, from Fortune 500 saying, we need interest rates lower. We need interest rates lower. Banks, they need interest rates lower. But at the same time, if they cut interest rates, inflation is going to go right back on up. For anyone who does not know, we have been trying to bring it down to around a 2% goal. We dropped it down to around 2.5%, which was close. Then we started cutting rates. We already cut rates one time, right? Now it's back up to 3%. The word on the street is if we go back above 3.5% on inflation, we're not going to be cutting any rates. If anything, we're actually going to be hiking rates back up. So that's the word on the street right now. If we go above 3.5% on inflation in 2025, it's not we're not cutting rates. we are actually going to be hiking rates back up. And right now, we are back up to 3% on inflation. So Jerome Powell is freaking out at this moment. The Federal Reserve is freaking out at this moment. They're saying everyone wants us to cut rates. Inflation's moving back up. Now again, we have unemployment at 4.1%. So there's no way we're going to be cutting rates. There is at this moment a 97.3% chance that they do not cut rates in January. And I bet you there's another probably 99% chance that they do not cut rates in March. I do not believe we are going to be seeing rate cuts until midsummer, until we're back on down to 2.5% on or lower inflation. The perfect formula for a booming stock market is a strong economy, low unemployment, and also low interest rates. But what we have right now is a strong economy with low unemployment, but high interest rates, which leads to cautious moving forward, right? Caution. People are nervous. People are scared here. So that is where we are currently at this time. Right? Why is the market falling? Well, we have inflation, interest rates, elevated valuations. I mean, just take a look at artificial intelligence and how big plays have run and rip. But let's go into today. Right? Let's see what we have going into today here. Well, as we break this on down, right, and we take a look over on the S&P 500. Hold on a second. Let's see where we're at this time. Excuse me. Oh, again, it's not here. We had to bring this on over. What we have at this moment, over on the S&P 500. As we can see, inflation watch, wholesale prices rose 0.2% in December, less than expected. Now, this is a little bit odd still, right? Isn't it a little bit odd? We're still seeing wholesale prices rising, but they're rising less than expected. So, I mean, is this good or is this bad? We're seeing that the S&P 500 is still falling. We could see that the S&P 500 is down over 1% since 2025. We could see how we are downtrending at this moment, and there is fear in the market. Now, is this good news or is this bad news, traders? You guys tell me. It's saying that we have wholesale prices rising, but they are rising less than expected. Okay. So it's like, I mean, to me, this really isn't the best news in the world, right? Imagine if you were going on a blind date. This might be a little bit rude, but let's think about it like this. If you were going on a blind date, and you're like, fine, I'll go with your friend, I'll go with whoever, like I'll double date. And your friend comes up to you and says, hey man, this girl or this guy is butt ugly, like super ugly. Like, oh man, you're going to have an awful time. You're going in there with like very bad expectations. You're going in there saying to yourself, oh wow, this is going to be awful. But you know what? It's not awful. That person isn't butt ugly. They're just kind of ugly. Right? That's kind of how it is. If I had a double date with my friend and he was saying, hey, Sean, like this girl is like brutal, like so like, ugh, right? And then I went there and I was like, all right, I'll be a good friend. I'll just go and hang out. And then you know what? She wasn't that bad whatsoever, right? Not pretty, but wasn't bad. That's kind of what it was. This is kind of how this is, right? We were expecting so much worse, but at the same time, we still have bad inflation. But it's almost like because we were expecting so much worse that this doesn't seem as bad, which is a really bad mindset to have in the stock market. It's like, guys, we were expecting so much worse. So even though that this is bad, it's not as bad as we thought. That's not really the way that we want to be investing. That's not really the way that we want to be trading in the market. So even though we are having a rise, the rise is less than expected. And that's what's, again, bringing in some decent buying volume to the market. And now with the market still feeding and still falling, people are getting very concerned about what's going to be happening next. What's going to be happening next with AI? What's going to be happening next with, again, 2025? What are we going to be able to see? If that's, again, on NVIDIA, which already has had a strong pullback. If that's over on Tesla, which already has had a strong pullback, but again, looking to bounce back on up right now. What is one of my favorite plays out there? One of my favorite plays out there, a lot of you guys know this, is going to be, bang, 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 let me look for it, is going to be AMD here. AMD, I got to talk about this play. AMD is a stock that I have currently at this time $12,000 invested in. I want to break this on down. I want you guys to understand truly on why I like my AMD investment. I put $12,000 in. I want to add more. I want to add $20,000, $30,000 on this trade coming on up. But I think there's a lot of people out there that truly still don't understand on why we like AMD and why so many people like AMD. So it says, advanced micro device dip buy. Could this be over the next 12 months the best dip buy out there? Over the past 12 months, AMD stock has dropped over 26%. And now investors are asking themselves, is this the bargain dip buy of 2025? So over the last 1 year, 12 months, AMD's dropped 26%. Now, that's not good in any sort of way. I'm not saying that's good. People are calling this play not advanced micro devices, they're calling this advanced money destroyer. If you put your money on AMD, you lose. And I can get why people say that. When you take a look over on AMD, what has this stock done? Well, AMD, ladies and gentlemen, has just been a play that has been falling and fading and dropping all the way from, again, 227, now all the way down towards 118. I get it. I can see why people dislike this play. But this stock is setting itself up with so much success right now. I think a lot of people are going to miss the boat on this. I really do. So I want to explain to you why this is such a good play in a very easy fashion. So let's be honest. Nothing's going to replace NVIDIA. NVIDIA is the semiconductor #1 play. Nothing's going to take it. I don't think AMD is going to take its spot. Let's not get crazy here. AMD is a great company, but they are never going to take NVIDIA's spot. NVIDIA chips are very expensive. NVIDIA's chips are also in high demand, which leads to shortage. AMD is not as big, is not as popular, is not as crazy as NVIDIA, but that's okay because there's so many buyers in the AI space. There's so much market share that AMD is going to be able to find its own niche. Here's a perfect example for you to be able to think about this. Think about it like this. NVIDIA is top tier. It's cream of the crop. It's the best of the best. In other words, think of NVIDIA as Ferrari. These cars are expensive, they're fast, and they're luxurious. There's a very specific buyer for NVIDIA chips. AMD chips are more like a Toyota Camry. They're practical, they're affordable, they're comfortable, they're useful, right? Both chips can easily have a clientele, right? Both chips could easily be profitable. Is Ferrari great? Ferrari's amazing. And you know what? There's a certain person that loves Ferrari. Someone who's wealthy, someone who's successful, someone that wants the best of the best. But there's also a lot of people that says, I just want the job done, right? There are going to be hundreds and thousands of companies out there that do not want to miss the AI rush, that say, I can't afford NVIDIA chips. I'm not Facebook. I'm not Amazon. I don't have hundreds of billions of dollars. So you know what? I'm going to go to AMD instead. NVIDIA is Lamborghini. NVIDIA is Ferrari. Those are profitable companies. But you know what? There's also profitable companies when you think of Honda, when you think of Toyota, when you think of whatever, kind of smaller brands, as in they don't make those crazy cars. The thing is, NVIDIA is so expensive now because they're in such high demand that they also have shortages and prices can be increased. AMD can't do that. AMD is just looking for a different space, looking for a clientele that is going to be able to use them. AI is so big though now, both can be able to thrive. So if we have Lisa Su, who has taken over the company back in 2015. In 2015, this company was a $5 stock. It got all the way up to $220 since the CEO took on over. So you would tell me, is this a good company over the last 10 years since the CEO has taken over? Stock's gone from $5 to 220. And now the stock's gone from 220 back on down towards around 100. Would that be a great dip buy opportunity as we have seen a company climb for the last 10 years? Absolutely, guys. Right? We know that AMD has strong position growth in markets. It's involved in artificial intelligence. We have, again, technology leaderships. They're brand new chips that are coming on out. We know it's competitive pricing compared to NVIDIA. We know they have acquisitions that they're making. They actually just had an acquisition 2 weeks ago. We know that they are a very strong company. Their revenues are going to be blowed out over the last 2 years. It's going to be awesome. 2023 was their only red year. Over the last 10 years, one red year. Everything else is green. I think what we have here is a company that is going to continue to move on up, and that's why I'm, again, going very big over on AMD in 2025. Now, what would be the best dip buy? Best dip buy would still be right around $100. But I do think AMD has massive potential to be able to make you money. I think AMD has massive potential to be able to absolutely crush it and be able to say, hey, you know what? This is going to be a competitor in a different world as AI, still the same market share, but again, a different world in AI. AI is so big, traders. We know how fantastic this could be and how, incredible this really could be. Now, what else, team? What else do I love so much sticking around the AI world? The AI world, I absolutely love, as you guys know, BWXT. BWXT, I've been, again, investing heavily over into this play. It doesn't matter where you like AI. There is so many different spectrums of AI, traders. It really is. But just surround yourself with AI. I think the worst thing that you can do in 2025, 2026, 2027 is go off the moon randomly, like just walk off a cliff randomly with what your investment's going to be. We know the big money. The big money is surrounding AI. The big money is Meta, Amazon, Tesla, NVIDIA, Microsoft, Apple. These are the big money companies. Where the big money goes, everyone makes money. Okay? So if you are saying, okay, they are investing hundreds of billions of dollars into AI, and you say to yourself, oh, well, I think water stocks are going to be very good. What does that have to do with anything, right? It's like, oh, well, I think, and you just pick something completely random out of the blue. Oh, I think nature stocks are really good right now. Or, oh, I think tire stocks are really good right now. I see people come up with the most random plays that they're like, oh, I think this company is going to be very good. If you want to be able to make big money in the stock market, I think one of the best things to do is surround yourself with money. So let's just think about what we can do here. So if we have AI, right? Let's just put AI right in the middle here, going into our large-term investments, long-term investments, larger investments in 2025. Here's AI right in the middle. Here's the AI center. Now, what are different branches that you can go off of AI? Well, first thing that we can do is we can go ahead and invest into chips, right? We already know that we could be able to invest into the hardware of AI. And that could be AMD, right? That could go ahead and we can invest over into NVIDIA. And those are going to be amazing opportunities right there. Or we could say, hey, you know what? I think AI, the best thing is going to be, we can go over to the software, right? We go over to software about, companies that are going to be building actual AI to be able to make nice profits. And these software plays could be Palantir, right? PLTR. That's going to be great. Or maybe again, CRM. And CRM, Salesforce. That's, again, another great company that we could be able to see at this moment. So again, if we want to go over to chips, that's one thing. If we want to go over to software, that's another thing. Now, what else comes with AI? Well, AI, we also want to say, all right, well, with AI, there's going to be a lot of new different hacks. There's going to be a brand new world of possibility on how to get in and be able to use AI for bad stuff, right? So we definitely want to be looking at maybe cybersecurity, right? So cybersecurity has to do with AI, where people are saying to themselves, okay, hey, you know what? There's going to be a lot of hackers that are going to use AI for bad. So why don't we go into PANW? Right? That could be something that we want to be taking a look at. We could also look at, CrowdStrike, right? CrowdStrike stock. That's going to be CRWD. So that's going to be something that you want to be looking at. Okay, so we have CRWD, we have PANW. These are all plays that we want to go look at. Or again, maybe we want to look at what's actually going to power AI, because we know our current grid can't supply enough power to actually have AI work. So that's going to be companies like BWXT. That's going to be companies such as SMR. That's going to be companies such as NEE, right? There's a whole bunch of companies that have to do with uranium. There's a whole bunch of companies that have to do with all these different plays. So it doesn't matter where you guys are actually even looking, right? The only issue I think that you guys can do in 2025 is to just be some random guy way out here, right? And just, being over on like Wall Street Bets and be like, hey, everyone, look at my computer. Like, guys, look what I discovered. Has anyone ever noticed that, that there's a lot of great profitabilities when you guys take a look at lemon stocks? Oh, lemons are going to be the new wave of 2025. Oh, everyone buy lemons. It's like, the worst thing that you can do is just be so far away from the money that it's like you have no chance. Traders, it's okay to go ahead and say, oh, Deck, you know what? I think chips are always going to be around. Like the hardware chips are great. Oh, Deck, no, we have to have profitability with these chips. We got to be in software. Oh, no, Deck, there's going to be cybersecurity issues. You got to, again, be going over to cybersecurity. Oh, no, Deck, if you want AI to be powered in any sort of way, we need to be able to look at these plays from an energy perspective. This is what I'm talking about when I say surround yourself with AI. When I say, again, don't just put, you don't just got to buy chips. There are many different things on people looking for the next wave. But the worst thing to do is to branch away from the number one hottest topic at this moment. When you branch away from the hottest number one topic at this moment, that's where you guys are going to start, really probably losing and not seeing the gains that you guys want. So think about, what are you most interested in? Are you just most interested in the backbone? Right? I'm most interested in the backbone right here, to saying, hey, you know what? Chips aren't going away. Are you interested in maybe, again, the new threats that are going to come on up? Are you nervous on how they're going to be profitable? Or are you nervous, again, that they're not even going to be able to be used without the right energy sources? So there are all different types of sectors and sections that you guys can be able to do. And that's why, if you guys take a look at my portfolio, guess what? I want to be looking at AMD. That's going to be one that I'm looking at. Guess what? I want to be looking over on PLTR, Palantir. I already bought Palantir at $29. I sold it. I'll be buying this again once it comes back on down towards around $50. I want to be looking at CrowdStrike or PANW. I don't have an exact target for these plays at this moment, and I'm already in on BWXT. So do you guys realize? It's like, okay, hold on a second. Dex portfolio isn't random plays. Dex portfolio is, again, breaking down AI in just multiple different sections because that's where all the big money's at. All the big money's on this play. So he's not just randomly buying things across the board saying, oh, I like this, I like that, I like this, I like that. No, they all have to do with artificial intelligence. Okay? So this is what most people are missing. This is what people don't realize. And this is a great way to diversify. Diversify doesn't mean, let me buy Apple. Let me buy, again, Charles Schwab dividend play. Let me buy VU. Let me buy Tesla. That's not diversifying. What I mean by diversifying is, again, diversifying as in go ahead and pick every sector of AI. If we know AI is where the money's at, there's, again, hardware, software, security, energy. That's diversifying. That's what it means to get yourself in on these good plays. So do your research. Find which ones you want, because while hardware has been the great runners over the last 2 years, maybe it goes to software, or maybe it goes to energy, or maybe it goes to the threats of cybersecurity. We don't know, but we could definitely realize that it's probably going to still be around AI in one way or another, right? So traders, that's what we love to do. I want to be able to help you, and I want to see you thrive.